Hello investors, welcome to Simpli Stocks. The Q3 or December quarter has now ended and companies have started releasing their business updates. These business updates provide partial information about how a company has performed during the recent quarter. They are not the full detailed results. Those usually come after a week or 10 days, but these updates still contain important and useful insights. By closely tracking these business updates, we can get a fairly good idea of which companies or sectors are likely to deliver strong results. This helps investors identify areas worth monitoring more closely. So in today's video, we will quickly go through 12 strong business updates announced over the past 10 days. We will not spend much time discussing business models. Our focus will remain strictly on business updates themselves. And yes, as a standard disclaimer, this video is not a buy or sell recommendation for any of these businesses. Please keep that in mind. With that, let's begin. The first company with a very strong business update is Zota Healthcare. Zota Healthcare provides affordable generic medicines under the brand name Dawa India. Zota runs pharmacy stores across the country. It is expanding very aggressively, and to support this expansion, it recently raised 350 crore rupees in funding from FIIs and DIIs. Investors in this round include Prashant Jain, 361, and also Sanshi Fund, which is linked to Mukul Agarwal and his daughter. Over the last 3 months alone, Zota has opened a total of 276 new stores. As a result, it now operates more than 2,330 medical stores across India. This is very strong execution. Zota had a target of opening around 1,000 stores this year. In the first half of financial year, it opened 473 stores. In Q3, it added another 276 stores. This means that in the first 9 months of the current financial year, the company has already opened about 750 stores. At present, Zota is in losses due to this aggressive expansion. However, as these newly opened stores mature, we should start seeing better numbers in the bottom line as well. After Zota, let us move on to jewelry businesses. PC Jewellers, Kalyan Jewellers, Senco Gold, PN Gadgil, and Titan. All of these are jewelry retailers. They sell jewelry through their physical stores. Now see, due to the rising gold prices, there was a negative sentiment in the market regarding jewelry businesses. But contrary to those expectations, or I should say negative sentiment, jewelry companies have been delivering very strong results. In fact, Q3 performance across the sector has surprised the entire market. Let us begin with the industry leader Titan. Titan's overall sales grew by 40% year on year. If we look at only its jewelry business, sales grew by 41%. Same store growth, or SSG, meaning growth from existing stores, stood at impressive 30 to 33%. Now let us look at Kalyan Jewellers and Senco Gold. Then I will share my opinion on these numbers. I had slightly higher expectations from Kalyan Jewellers and thought it might outperform Titan. However, it is not appropriate to judge companies solely on the basis of one quarter. Anyways, Titan sales grew by 42% with same store growth of 27%. Senco Gold, however, delivered a completely unexpected and outstanding performance. Senco's sales have grown by 51% year on year, and with same store sales growth contributing around 39% here. PC Jeweler has also reported strong numbers with 37% sales growth in Q3. For PN Gadgil, we have to focus specifically on its retail business, which has recorded a robust 46% growth. PN Gadgil is currently very bullish on store expansion, and you can also study this company independently once. At the time this video was being recorded, Thangamile had not released its update yet. Most likely, its performance will also be good. In our Simpli Stocks community, we track jewelry companies very closely, and their performance has been very good. Now, in my view, one major reason for this performance is that after Diwali, gold prices corrected for a short period of time. During that correction, there was heavy buying, which benefited jewelry retailers. Another factor is the postponed demand. As gold prices kept rising, many people who were planning to buy jewelry for weddings or bridal purposes in 2026 kept delaying their purchases. However, as a wedding or function finally approaches, purchases cannot be postponed further, right? You have to buy whatever the prevailing price is. As a result, demand that was postponed during Q1 and Q2 surfaced very strongly in Q3. This explains why Senco Gold, which has higher exposure to bridal jewelry and non-studded purchases and relatively lower exposure to lightweight lifestyle jewelry delivered such bumper results. The same logic applies to Thangamile as well, which is also most likely to post strong numbers. There can be a good swing opportunity here. And if you would recall, Titan and Kalyan had strong H1 numbers, but Thangamile's and Senco's June quarter results were somewhat surprising. Another advantage that Senco and Thangamile seem to be benefiting from is customer migration. Tanishq typically charges the highest making charges, followed by Kalyan, Malabar, and similar brands. Senco and Thangamile come after that. Since customers cannot save on gold prices, the only option left now is to save on making charges by purchasing jewelry from relatively smaller brands. But yes, regardless of market sentiment, jewelry retailers have posted very strong numbers. Now a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Shorts, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Let us return to our discussion. The next company which has released very strong business update is V2 Retail. V2 operates in the value fashion retail segment where it directly competes with the likes of V-Mart, Bazaar Style and Vishal Megamart. V2 has been the fastest growing player in this segment and it maintained that performance in Q3 as well. Sales grew by 57% year on year. These numbers are particularly impressive because last year Durga Puja fell in Q3, whereas this year it fell in Q2. This means that last year's base was high and V2 did not benefit from festival season in Q3 this year. Yet it still delivered 57% growth. Like Zota, V2 is also rapidly expanding its store network at a CAGR of 40 to 50%, which is driving this strong sales growth. Valuation comfort is still limited as business trades at a premium PE due to its high growth rate. Still, from a growth perspective, there is potential here through new store openings. This is also why the company recently conducted a 400 crore QIP, which also saw participation from several domestic institutional investors. The 9th and 10th companies with strong updates are Force Motors and SML Mahindra. After a long time, we are seeing a turnaround in the commercial vehicle segment. When November sales data was released, it appeared that the performance might be one-time event. However, December data has also been strong for several auto companies. Let us look at SML's December monthly sales data. You will see a massive 67% year-on-year growth. Similarly, Force Motors has also reported around 50% year-on-year growth. The commercial automobile segment is a shallow cyclical sector. As long as monthly sales data remains strong, stock prices tend to rise. Both SML and Force have now delivered 2 consecutive months of strong numbers. If you can consistently track monthly auto sales data, you can potentially take advantage of these cycles. However, if you prefer structurally stable businesses, instead, then you can look at companies like Eicher, Eicher and Mahindra. Now, so far we have covered retail, jewelry and automobile businesses. Let us now look at a few banking and NBFC names that have reported strong updates. First is CSB Bank. CSB is into gold lending segment, which is currently seeing very good growth. We had covered CSB in our previous video as well. In Q3, its gold loans business grew by impressive 46%. And this is just the beginning. I believe gold lending space is likely to trend throughout this year in 2026. Apart from gold lending, the microfinance segment is also seeing a good turnaround. Like commercial vehicles, the microfinance sector also goes through shallow cycles. Here, entry and exit points must be tracked carefully. It is a high risk but high margin, high growth sector. And if you are able to successfully ride even just one cycle in microfinance, it can significantly benefit your portfolio. Last year, the segment struggled due to rising loan defaults and NPAs. Many companies even stopped issuing new loans, and players like IDFC First and Ujjivan partially or fully exited microfinance as well. As a result, competition in the sector has also reduced. Here, you can study Credit Access Grameen independently. The company provides small unsecured loans ranging from 10-20,000 rupees up to 50,000 rupees in rural and semi-urban areas, which is essentially what microfinance is. Its portfolio at risk, which indicates potential future NPAs, has declined consistently, signaling improving fundamentals. The company has restarted new loan disbursements, and most importantly, Karnataka, its largest market, had been under stress so far, but it also fully recovered in this quarter. During the quarter, Credit Access also increased its loan portfolio in Karnataka by almost 90 crore. Poonawala's AUM grew by 77.5% year-on-year and 15.3% quarter-on-quarter. AUM refers to the total loan amount outstanding. And yes, if you are analyzing microfinance companies, you should not focus on PE ratios. In fact, PE is not even the right metric for banks and NBFCs. So last year, as you know, was extremely bad for microfinance players due to high NPAs and provisioning, which dragged down profits and pushed some companies into losses as well. So it will distort PE multiple. Instead, you have to focus on the direction and speed of recovery rather than obsessing over PE multiples in microfinance right now. Now, so far, we have studied business updates from 12 companies, all of which are good businesses that you can study independently. If you like this video, then do give me a thumbs up. You can also subscribe to our channel, Simpli Stocks. Your likes and subscribes are our biggest motivation that help us to continue bringing such high quality videos for you every week. So do like this video, and yes, also subscribe to the channel. I'll see you in the next video. Happy investing.